finance, and fake news. The toxic information you're fed daily.
Welcome to the financial circus, where panic is packaged, drama is sold, and your sanity is traded like penny stocks. Forget rational investing. The system does not want you calm, patient, or informed. It wants you scared, impulsive, and obedient. Every headline, every prediction, every viral expert is designed to hijack your brain, drain your wallet, and keep you coming back for more punishment. You are not learning about finance. You are starring in a never-ending comedy show where the joke is always on you. In this twisted game, numbers are secondary. What matters is fear, greed, and the constant illusion of urgency. The media screams bloodbath, analysts cosplay as prophets, and social media gurus shout nonsense with all the confidence of cult leaders. Meanwhile, the boring truth, the one strategy that actually works, is too dull to sell. That is why you never hear it. And that is why most investors keep donating their wealth to this carnival of manipulation.
The gospel according to clickbait.
Welcome, my dear investor, to the holy church of financial headlines. Forget logic, forget analysis, and forget common sense. The true path to wealth destruction is paved with clickbait, neon graphics, and breathless anchors who speak as if the sky is falling every other Tuesday. Why bother opening an annual report when you can simply surrender your wallet to the gospel according to clickbait? After all, if it is written in capital letters with dramatic music, it must be divine truth, right? Let us start with the obvious. Headlines do not exist to inform you. They exist to provoke you. They are designed like financial slot machines, engineered to keep you pulling the emotional lever until your portfolio looks like a charity donation to Wall Street.
Ow.
The rules are simple. If the market rises slightly, you must believe we are in a historic rally. If it drops a fraction, it is clearly the apocalypse. There is no middle ground. There is only salvation or damnation. And the headlines are the sacred scripture that will guide you directly into financial ruin. The best part, the vocabulary is recycled more than your grandmother's Christmas wrapping paper. Markets soar, plunge, collapse, recover, surge, rebound, bloodbath. It is like a cheap soap opera with the same recycled plot lines, except the victims are your retirement savings. You are not reading news. You're binge-watching a low-budget drama where the villains are invisible and the hero never shows up. Financial journalism has discovered something much more profitable than accuracy. Drama. Accuracy is boring. Accuracy is slow. Accuracy is the guy at the party explaining tax brackets, while everyone else is doing shots. Now, drama, on the other hand, is cocaine for your brain. Drama makes you scream, the end is near, and slam the sell button like you were saving your family from a burning building. Drama is what keeps you glued to the screen, watching the same 3 stock charts from 12 different angles, while advertisers sell you antidepressants during commercial breaks. And then there are the prophets, the so-called experts paraded across your screen like financial messiahs. These are not analysts. They are actors playing the role of wise oracle, while delivering lines written by a marketing department. They speak in absolutes because ambiguity does not sell. You will never hear the market might go up, or it might go down because nobody really knows. Instead, you hear the market will collapse within 3 months. And when 3 months pass and civilization remains stubbornly intact, nobody calls them out. They simply adjust the prophecy. The collapse is delayed, but inevitable. Congratulations, you just bought into financial astrology. The genius of clickbait is that it hijacks your biology. Fear grabs your attention faster than any spreadsheet ever could. Calm analysis feels safe, but dull. Fear feels urgent, life-threatening, and impossible to ignore. The caveman part of your brain that once screamed, "Lion in the bushes, run," is now screaming, "Dow Jones, down 1.5%. Sell everything before you starve." The only predator here is the ad revenue system that feeds on your panic. And do not underestimate the role of social media in this circus. Twitter, TikTok, YouTube, thumbnails plastered with red arrows pointing down, faces frozen in exaggerated panic, and titles like the end of the financial world. You click, of course you do, because nobody can resist the emotional cocktail of curiosity and dread. 5 minutes later, you are convinced that selling your house and investing in canned beans is the only rational strategy left. Meanwhile, the truth is embarrassingly simple. Markets fluctuate. They rise, they fall, and they recover. But that does not keep you watching. Nobody cares about markets remain mostly stable. That is not news. That is ambient. So instead, you are spoon-fed hysteria until your brain is fried enough to act against your own interests. Here is the brutal reality. If you are making financial decisions based on headlines, you are not investing. You are gambling with someone else's script. You are not an independent thinker. You are a background character in a drama designed to extract clicks, views, and add dollars while your portfolio becomes the punchline. You are the devoted disciple of the cult of clickbait, tithing your sanity and your savings at the altar of financial nonsense. The final irony, the people who actually build wealth are ignoring all of it. They are not reading headlines, they are not watching breathless anchors, and they are not glued to their phones at 3 o'clock in the morning. They are calmly buying, holding, and letting time do the work. They are laughing at the circus while you are still in the clown car, honking your panic horn. So, the next time you see a headline screaming markets in chaos, do yourself a favor. Breathe, zoom out, and remember that chaos sells better than calm. If you want to keep your money, stop worshiping the gospel according to clickbait. It is not scripture, it is not wisdom, it is not even journalism. It is financial entertainment designed to keep you stupid, scared, and broke. But hey, at least the drama is free. Your portfolio, unfortunately, is not.
Expert predictions. Astrology in a suit.
If you think Wall Street analysts are the modern prophets of finance, then I have a lovely crystal ball to sell you at a discount. Analysts do not predict the future. They decorate ignorance with buzzwords, sprinkle in some fake confidence, and serve it to you as research. They are essentially astrologers in Armani suits, except astrologers at least admit they are guessing based on stars. Analysts, however, want you to believe they are decoding the hidden language of the universe, when in reality, they are just flipping coins and hoping nobody notices. Let us examine the art form. An analyst appears on television with perfectly gelled hair and a voice tone that screams authority. He looks directly into the camera and declares, "We expect the S&P 500 to reach 5,200 by the end of the year." That number sounds very scientific, very precise. 5,200? Not 5,000, not 6,000, but 5,200. Where did this mystical figure come from? A secret formula? Proprietary data? It came from the same place where horoscopes come from, thin air. It is essentially the financial equivalent of saying Mercury is in retrograde, so your love life will improve by next Tuesday. The brilliance of analyst predictions is that they are unfalsifiable in the short term. If the market moves in the opposite direction, the analyst simply explains that unexpected macroeconomic headwinds interfered. If they are accidentally correct, they parade around like Nostradamus in a business suit. It is a game where they win no matter what, and you lose for believing them. Even the language is designed for fraud. Analysts never say, "We have no idea what will happen." That would be honest. But honesty is terrible for business. Instead, they use a kind of financial Mad Libs. Plug in terms like rotation, headwinds, resilient fundamentals, liquidity dynamics, and suddenly you sound like you know something. Try it yourself. We see potential tailwinds in the macro environment, but remain cautiously optimistic due to sector rotation. Congratulations, you are now qualified for a guest spot on CNBC. The comedy intensifies when analysts contradict each other. One says oil is going to soar, another says it will collapse, and both are invited back next week, as if nothing happened. Imagine a weatherman saying, "It will definitely rain tomorrow, unless it is sunny, in which case, expect dry conditions." Would you still take him seriously? Probably not. But in finance, this nonsense is not only tolerated, it is celebrated. What about the written reports? Those 100-page monstrosities filled with charts, graphs, and jargon thicker than concrete? They are not meant for you to understand. They're meant to look intimidating, so you assume the analyst must be right. It is performance art. By the time you have finished the executive summary, you are so overwhelmed with acronyms and forecasts that you assume the analyst is a genius. Spoiler, he is not. He's simply a very confident storyteller with a Bloomberg terminal. Social media has made this circus even more grotesque. Now, you do not just have bank analysts. You have armies of self-proclaimed experts with webcams. microphones, and thousands of followers. They slap arrows on charts, make bold declarations like the stock will 10x by next quarter. And suddenly they are gurus. Their accuracy rate, about the same as guessing heads or tails. But who cares? You called one stock correctly in 2021, and that single hit will be milked for clout until the end of time. Why do people keep falling for this? Because human beings crave certainty. We hate the idea that nobody knows what the market will do tomorrow. It is too terrifying to accept chaos. So we buy certainty in whatever form it is packaged. We do not want the truth, which is uncertainty. We want someone in a suit to hold our hand and tell us everything will be fine if we just follow their prediction. It is financial comfort food, heavily processed and guaranteed to rot your brain. Meanwhile, the reality is brutal and boring. The market is chaos wrapped in probabilities. The best investors know that forecasts are entertainment, not guidance. They ignore the noise, diversify, stay patient, and let time do the heavy lifting. But that approach does not sell. Stay calm and do nothing will never trend on Twitter. Markets will crash tomorrow unless they rise dramatically, Will. The final joke is this. If analysts really knew the future, they would not be on television giving you advice for free. They would be on a yacht, sipping champagne, and laughing at the rest of us peasants. The fact that they are on camera, begging for attention, is the clearest sign that they are full of nonsense. So here is the takeaway. Analysts are not prophets. They are performers. Their job is not to guide you. It is to entertain you, confuse you, and keep you trading. The more you act on their insights, the more commissions and fees the system extracts from you. Your financial well-being is irrelevant. What matters is that you keep believing in the illusion of certainty. Next time an analyst tells you where the market is headed, do yourself a favor. Flip a coin. At least the coin has the decency to admit its odds.
The panic machine. Fear first, facts later.
If financial journalism were an Olympic sport, the gold medal event would be manufacturing panic out of absolutely nothing. Nobody does hysteria better than the media. The recipe is simple. Take a tiny market hiccup, slap on dramatic music, splash the screen with red arrows pointing down, and declare the end of capitalism as we know it. Congratulations, you are now informed. At least informed enough to sell your investments at the exact wrong moment. The business model is clear. PanicPays.com is boring. Rationality does not keep you glued to your screen. Anxiety does. No one clicks on an article titled, "Markets continue to do normal market things." That would not sell a single advertisement. But give it a headline like, "Global Bloodbath on Wall Street," and suddenly millions of eyeballs rush to the screen, adrenaline pumping, ready to make terrible financial decisions. Take an average Tuesday afternoon. The S&P 500 dips by 1.5%. Because a Federal Reserve official coughed during a press conference. Rational interpretation. Markets fluctuate. Carry on with your life. Media interpretation. Markets in turmoil. Is this 2008 all over again? By dinner, your aunt is calling you in tears asking if she should sell her index fund. While Twitter is collectively convincing itself that civilization is ending, by the time reality catches up and the market stabilizes, the damage is already done. Portfolios are wrecked, investors are panicked, and the news cycle has moved on to the next fabricated crisis. The trick is that panic is profitable. Every time you feel a rush of dread, you click again. Every time you panic sell or panic buy, trading platforms earn fees. Every time you convince yourself the world is ending, advertisers sell you gold coins, survival gear, or a brand new recession-proof newsletter. Your fear is their revenue stream, and the more scared you are, the fatter their pockets become. Let us not forget the expert panels that add fuel to the fire. For people in suits sit in a studio, screaming contradictory predictions at each other for 20 minutes. One says the market is doomed, another says the market is booming, and the third says it is both, depending on your horoscope. The fourth nods seriously, adding words like headwinds and geopolitical instability to make it sound intellectual. You walk away more confused than when you started, but somehow convinced that you need to tune in again tomorrow, just in case the apocalypse actually happens this time. The media has also mastered the illusion of urgency. Every story is framed as if action must be taken immediately. The window is closing, investors rushing to safety, time is running out, the clock is always ticking, the crisis is always now. Waiting calmly is never an option because waiting does not generate clicks. Your constant anxiety is what keeps the machine running. And then there's the theater of imagery. A single red candlestick on a chart becomes a collapse. Footage of frantic traders holding their heads in despair plays on loop, even though those traders are probably interns checking TikTok between coffee runs. The color red floods the screen because red equals danger, and danger keeps you watching. By the time you finish your coffee, you are convinced your retirement account is in flames. Meanwhile, the smart investors are ignoring all of this noise. They are calmly buying dips, sipping their coffee, and chuckling at the hysteria. They know the truth the media does not want you to realize. Markets fluctuate, recover, and grow. But that reality does not sell. Stability is dull. Fear is addictive. And the more addicted you are, the more profitable you become. The most dangerous effect of this constant panic is how it trains investors to behave badly. You panic sell at the bottom, you FOMO buy at the top, and you repeat the cycle until your portfolio looks like a roller coaster designed by sadists. The media is not simply distracting you, it is actively sabotaging your financial behavior. Fear first, facts later, preferably after the commercial break. Here is the cold reality. The media is not misinforming you by accident. It is their strategy. A calm investor does not bring in revenue, but a panicked one is a goldmine. The headlines are not information. They're emotional landmines designed to blow up your rationality on command. So, the next time you see a headline screaming about a market bloodbath, remember this: there is no lion in the bushes. There's only an excited intern writing clickbait that hijacks your amygdala. Do yourself a favor. Breathe, zoom out, and stop feeding the panic machine. Because if you let it control you, you are not investing. You're gambling with your sanity, one headline at a time.
Social media gurus, confidence without competence.
Ladies and gentlemen, let me introduce you to the modern prophets of finance, the self-appointed social media gurus. These are the people who could not pass a high school economics test but somehow have the audacity to predict the collapse of global markets with nothing more than a webcam, a badly lit room, and a chart they found on Google. They do not need credentials. They do not need experience. All they need is confidence. Because on the internet, confidence is competence. Or at least it looks that way until you check your bank account after following their advice. The formula is insultingly simple. Step 1. Start a YouTube channel or TikTok account with a name that sounds mysterious but authoritative, something like Financial Oracle 101 or Crypto Messiah. Step 2. Buy a cheap microphone, a ring light, and a suit jacket you only wear from the waist up. Step 3. Make bold predictions with the energy of a doomsday preacher. This stock is guaranteed to skyrocket. The market will collapse in 30 days. Buy this one coin and retire next week. Step 4. Collect followers, likes, and ad revenue while your audience gets financially demolished. Do these gurus care about accuracy? Of course not. They care about engagement. And engagement is built on drama, not facts. If a guru says something outrageous and it goes viral, they win, regardless of whether they are correct. If their prediction crashes and burns, they quietly delete the video and post a new one with an even louder title. The cycle is endless, and the victims are always the same. Gullible investors desperate for shortcuts. The irony is that these gurus often present themselves as rebels against mainstream finance. They rant about how Wall Street lies to you, how the media manipulates you, how analysts are corrupt. And then they proceed to do the exact same thing, except with worse production value and fewer ethics. They are not anti-establishment truth-tellers. They're discount knockoffs of the very system they claim to oppose. The difference is that the Wall Street analyst has a Bloomberg terminal, while the TikTok guru has an Excel sheet and an ego the size of Jupiter. The worst part is how convincing they can sound. They use jargon they barely understand, mix in some colorful charts, and talk with absolute certainty. Certainty is seductive. It feels safe. People crave the illusion of control, and these gurus deliver it in 15-second clips that spread faster than the plague. You are not thinking critically because the packaging is too shiny. The guru looks confident, therefore he must know what he is talking about. Spoiler, he does not. It's even better. Many of these gurus monetize their nonsense directly. They sell exclusive courses, premium signals, and secret communities, where they promise to share the insights that will make you rich. The only person getting rich is the guru, cashing in on your desperation. It is the oldest scam in the book. Promise riches, deliver nothing, blame the victim when it fails. You did not follow the strategy properly. And of course, the guru is never wrong. You were simply too stupid to apply their magical formula. And let us not ignore the herd mentality that amplifies this circus. When thousands of people start repeating the same nonsense, it begins to feel credible. Everyone is talking about this stock, so it must be a once-in-a-lifetime opportunity. No, it is not. It is a once-in-a-lifetime opportunity for the guru to dump his position while you rush in at the top. He thanks you for your service. Your money has been successfully transferred. The comedy reaches its peak when a guru accidentally gets something right. Perhaps they predict a stock will rise, and by sheer luck it does. Suddenly they become a prophet. They will never let you forget that one correct call. They will put it in every thumbnail, every bio, every speech. Meanwhile, their 99 other failed predictions are quietly buried in the digital graveyard. If you guessed coin flips every day for a year, you would be correct sometimes too. That does not make you a genius. It makes you a gambler with good luck. So why do people keep falling for this? Because certainty is addictive. Because fear of missing out is stronger than rationality. Because nobody wants to admit that the boring path, diversification, patience, and discipline, is the one that actually works. People would rather believe a stranger with a webcam than accept that wealth takes time and effort. The guru sells dreams. Guess which one goes viral? Here's the truth. Social media finance is theater. It is entertainment disguised as wisdom, a confidence trick dressed up with stock charts. These gurus are not teachers, they are hustlers. And the sooner you realize that, the sooner you can protect your wallet. So, the next time you see a video titled "This secret stock will make you rich," do yourself a favor. Scroll past. The guru is not your financial savior. He is just another clown in the circus of confidence without competence. And you are the punchline if you take him seriously.
The boring truth they will never sell you.
Here is the cruel joke about finance. The truth is so boring that nobody wants to hear it. Financial media cannot sell it, analysts cannot package it, and social media gurus cannot make it go viral. The boring truth is this: markets go up, markets go down, and over time, markets go up again. That is it. That is the whole script. There's no magic formula, no secret shortcut, no hidden prophecy. But if someone actually told you this on television, you would immediately change the channel, because nothing sells worse than reality. Think about it. The strategies that actually work are so dull they could put an insomniac to sleep. Diversification, patience, dollar cost averaging. Please, I would rather watch paint dry. Yet these are the unglamorous, proven methods that quietly build wealth over time. The catch is that they do not make exciting headlines, and they certainly do not trigger dopamine in your brain. Nobody has ever gone viral by saying, "Stay calm," by broad index funds, and "Do not panic." That is why the entire financial circus exists. The media, the analysts, and the gurus all know that you will not click. Share or subscribe if the message is "be patient." So instead, they sell you drama. Drama is addictive. Drama feels urgent. Drama makes you believe you must act immediately or risk financial doom. Calm is free. Panic is profitable. Guess which one the industry prefers? The boring truth also does not flatter your ego. You want to believe that you are special, that you can outsmart the system? You will discover the one secret stock nobody else has noticed? Reality check. You will not. The only people who consistently win are the ones who stop trying to be heroes and embrace the boring grind of long-term investing. But where's the glamour in that? Where's the viral content? Where's the chance to scream "I told you so" on Twitter? Patience does not stroke your ego, and that makes it very hard to sell. It gets worse. The boring truth requires discipline, and discipline is the opposite of fun. Discipline means ignoring headlines screaming bloodbath. Discipline means refusing to panic sell when everyone else is sprinting for the exit. Discipline means buying when fear is high and sitting quietly when greed is rampant. In other words, discipline means acting like a rational adult in a market designed to provoke toddlers. No wonder nobody wants it. Of course, This is why the boring truth is hidden. The financial industry thrives on your impatience. Brokerage firms make money when you trade, not when you sit still. Media companies make money when you panic, not when you relax. Gurus make money when you buy their latest secret formula, not when you roll your eyes and walk away. If everyone embraced the boring truth, half the financial circus would go bankrupt tomorrow. The irony is that the boring truth works precisely because it is boring. It does not rely on timing the market, which nobody can do. It does not require magical predictions, which are always wrong. It simply harnesses time, compounding, and consistency. Three forces that quietly outperform the chaos. The problem is that these forces move too slowly for your impatient brain. You want fireworks, you get slow growth. And so you abandon the strategy, chase excitement, and hand your money to the very people who thrive on your self-sabotage. Here's the part you hate to admit. You already know the boring truth. Everyone does. Spend less than you earn. Invest consistently. Diversify. Be patient. It is not a mystery. It is not a conspiracy. It is not even difficult to understand. What is difficult is resisting the constant stream of noise designed to pull you away from it. The financial circus survives because most people refuse to accept that boring wins. They would rather lose money dramatically than build wealth quietly. They would rather follow a headline promising the next Amazon than stick to the simple math that works. They would rather chase quick dopamine than embrace long-term discipline. The boring truth is sitting right in front of them, but they cannot see it because they are too busy chasing illusions. So, here is the bitter punchline. The market is not your enemy. The media is not even your biggest enemy. Your own impatience is. If you want to win, stop seeking excitement in a place where excitement destroys wealth. The financial industry will never sell you the boring truth, because the boring truth does not pay them. It only pays you. But then again, that is the problem. Nobody wants to hear that the secret to wealth is to shut up, sit down, and wait. Everyone wants fireworks. Everyone wants shortcuts. Everyone wants to believe that this time it will be different. Spoiler, it will not. The boring truth is the only truth worth following. Everything else is just expensive entertainment.
Stop playing the fool. Unplug from the panic machine before it eats your wallet.
At the end of the day, the market is not broken. You are. The charts are fine, the economy moves on, but your emotions get hijacked by every cheap headline and every fake prediction. No. You are not investing. You are panic-licking your way into poverty while someone richer laughs and thanks you for the contribution. If you continue worshiping the cult of clickbait, the only thing compounding is your regret. The escape route is simple, but it is not glamorous. Stop listening, stop reacting, and start accepting the boring truth. Patience, discipline, and time will quietly build wealth, while the circus keeps screaming in the background. The financial media will always sell chaos because chaos pays them. But if you want to keep your money, learn to laugh at the show and walk away from the panic machine, because the market will be fine. The real question is, will you?